Hello, everyone, and we're back for another great episode of Hotel Talk. Again, not with anyone directly from the hotel industry, but someone who I did meet at St. Raphael Resort and Marina, which is what this podcast is all about, connecting people and showing how we're all connected one way or another by hotels and this wonderful industry that gets to welcome so many people in to its bosom, so to speak. So Demetris Nicolaou, who is here with me now, is from Leon MFO Investments. And I love this because, as you guys know, that is my son's name. So immediately when we were at a cocktail party organised by our dear Natalia Kardash, who is also part of Hotel Talk, she had an episode a while back, introduced us and we said, right, we started talking. My goodness, it's such an interesting industry. And we said, let's get you on this podcast. So welcome, Demetri.
Thank you. Thank you for having me, Farah.
Thank you so much. So, Demetri, let's start. Just tell us a bit about you. Obviously, you're from Cyprus, but tell us a little bit about you, where you grew up.
Sure, okay.
What you love about this island. Like, let's hear a bit about you before we get into your business.
Our company, Leon MFO Investments, were based in Limassol. And actually, I grew up not far from the where the company is today.
Oh.
Although the company is 10-year-old, this year we're celebrating our 10-year anniversary.
Congratulations.
Thank you. But I ended up going to the States after my military service to study. And I ended up staying in the States for 11 years.
Wow. Where did you go in the States?
I was in Washington, D.C., which was an amazing experience because it's the capital city and it's very international. I used to live near all the embassies, which was also very safe and so on. But I ended up working for an investment firm back then in the States, they were investing in emerging markets. And emerging markets back then, and that was like 28 years ago, which also reveals my age. But emerging markets back then was like a new asset class. Just like today you talk about Bitcoin or new assets that are out there. It used to be back then, it was emerging markets. And we had the investment firm, we had clients like big US pension funds who wanted to get some small exposure into emerging markets. And that's how they came to us. So I ended up staying in this company for about 6.5 years, which made me travel a lot to many different emerging markets, to interview the management of companies, to see companies, to assess, to analyze, to determine if this company should be included in our portfolio, and so on. So it was an amazing experience. Plus, I had the opportunity to work with many, many international people.
But what did you, so I'm going to just backtrack a bit. So what did you study? I'm assuming finance, but
yeah. I studied finance, I got my MBA, and then I took the Chartered Financial Analyst course, which is it used to be a 3-year, very tough exam. So when you become a CFA, it's like an international passport. When you're a chartered financial analyst, you're like, this is what's demanded in many of the investment firms globally, from Hong Kong to London.
And it's quite a huge thing to have left Cyprus, Cyprus then, which was more a simple life, and end up in Washington, D.C. That must have been quite a big
It was.
shock.
Actually, I didn't have any family there. I didn't know many people. I ended up meeting many of my, from fellow students and then colleagues from work, and I ended up creating my own network in the States, which I try to maintain even to now.
Yeah, amazing. So, okay, explain to us in layman terms, what is emerging markets? Okay. And why is it important?
There is a category of markets which, of course, they used to be called undeveloped or underdeveloped. And the term emerging was coined by our CEO because he used to work at the World Bank. And he used to travel to many of these markets trying to develop...
You're CEO of Leon or of the company that you were working then? Yes, okay.
Back then. So basically the idea is that these are markets which are not fully developed, but you can, as an investor, you can find mispriced assets, and you can find opportunities, because when you do your own
which
analysis,
are intangible businesses and property. And
we used to invest mostly in companies listed on the local stock exchanges. So you had to deal with some of the stock exchanges were small, illiquid, not so much information. This is why we had to fly and be on the ground, because when you do your homework, when you analyze companies, this is where you discover value.
But how do you quantify that value? So you fly in and you go to, I don't know, can I say Mexico? I mean, okay.
Yeah.
So let's choose a country like Mexico. And you end up there and you want to look into a certain business. I don't know, give me an example of a business.
Okay, it may be a cement factory.
A cement factory, perfect.
A manufacturer.
And you go and you talk to the management, you go talk to the staff, you talk to the locals. How do you know what they're telling you and the information they're providing you is correct, is non-biased? It's so interesting, because I'm sure there's quite a strict methodology that is applied.
Actually, we now use a similar methodology in Leon MFO Investments for our Leon Income Fund. We have a top-down and a bottom-up approach. Top-down, it means you look at the economy, you look at the trends. Are the interest rates going down in each of these economies? Are consumers being able to borrow more? Are they going to spend more? Is their income, their personal incomes rising? So this is on a macro level. So this is the top down. Then from a bottom up, you take the company itself and you analyze it, the financials, the quality of management, the product they have, their market share, and then you compare it with the competition as well. Do they have other competitors? What is their competitive advantage? How profitable they are? You look at the debt levels. You don't want the company to be over leveraged. But quality of management, debt level, these are the key points to look for. And of course, the potential for growth. Are they innovating? Are they a leader in their industry? Are they exporting? Are they growing? Are they reinvesting their profits? So you look at a number of factors to decide. And finally, you decide at what price, what is the stock market price today? At what price am I buying this company? I mean, in your industry, let's say you want to buy a new 4-star, 5-star hotel. Yes, you can value the land, the property, the building. But on the other hand, you must look at other factors as well. And what is the price you are paying? Maybe it's a good property, maybe it's in a good location, but do you overpay for it? Do you pay a fair price? So this is what you have to assess, actually.
This is the eternal thing with hotels, is do you go with the value of the asset, meaning the land and the actual building,
the cash flow.
Or the cash flow, and
Exactly.
then do you apply the typical 10 times, 12 times rule, which really in a hotel means that, then there are very famous cases. I think the Ritz, was it in the 20s? It was sold for some absolutely abominable price because on paper they hadn't been revalued, or so it's insane. So why many people listening to this, of course, will be very attuned to investments and investment banking, but the average person who's wondering, where shall I put my money? I've made some money. How shall I invest it? What would be the best way to move forward?
Actually, thank you for this question, because I have been involved, because I'm also a member of CFA Society of Cyprus. 10 years ago, I was the president of the society. I was elected president. But for the last 5 or 6 years, CFA Society of Cyprus has the initiative of financial literacy. This initiative was also adopted 2 years ago, 3 years ago by the Central Bank of Cyprus and by CISEC. And our company, again, Leon MFO Investments, we support this initiative. We have seen some statistics which came out of the Central Bank of Cyprus that Cyprus scores very low on the financial literacy scale, based on some surveys, questions, and so on. The score of Cyprus is 4.8 out of 7. 7 is the top. This is OECD's score. So 4.8 is considered quite low, and it means that two-thirds of the population, more than 66%, is financially illiterate. So now, there is a committee actually in Cyprus which is formed by members from the Central Bank of Cyprus, Ministry of Finance, SAISEC, University of Cyprus, TEBAC. So these are all economists and people who are very good with finance, trying to educate the average citizen of the average person of Cyprus with targeted campaigns. It will be a topic they want to introduce it to public schools, especially in secondary schools.
Yeah, because I was going to say, how can you then educate people, and what's the best way, especially someone who's already in their 30s or 40s or 50s or 60s? How do you get that message to them?
And this is among the groups that they will target. First of all, they want to target the secondary schools, the universities, the local universities, where you have people in their late teens, early 20s.
It is such an important segment.
The young generation, which they define people under 29 years old, who are just starting to get their first employment. Women, because it showed at least women were honest enough to admit actually in the survey. I'm not saying women are less financially literate, but they were at least, they admitted during the survey that they didn't know much and they let their husbands take decisions. But their husbands were not the best.
Maybe they're not any better than them.
But
actually, I'm happy you say that, because there's so many studies that do prove that women will always undervalue themselves and men will always overvalue, which has its pros and cons. You know, men will always ask for a bigger salary. A woman will take, years before saying, hello, can I? So, yeah, it's quite interesting.
But what came out from this surveys also, which I think is interesting, and then I will go back to the answering your question, that it showed that in Cyprus, 45% of the population didn't understand interest compounding. Interest compounding, you need it when you borrow to buy a house, to buy a car, on your credit card. You even need
Which the average person, I mean, I don't know what the percentage is, but everybody borrows.
Exactly.
I mean, even the top businessmen have their loans, and most people borrow to buy their first car or their cars, mortgages.
Exactly. So this was actually shocking to see that 45% of the population didn't understand what is interest compounding.
Okay, well, let's ask, what is business compounding?
The idea,
interest compounding,
is first to have to lay the foundation before allowing people to make their own investment decisions. And the idea here is to, I'm not trying to avoid the question.
No,
the idea is to, first of all, make people understand what are some of the insurance products. Because they buy insurance for their health, for their properties, they pay premiums, but do they really understand the coverage? Some insurance has some investment aspects to it. So in the end, maybe when you're 65, you receive a lump sum back. They need to understand funds. Funds, Leon MFO Investments, we're a fund manager. We offer a couple of funds to the Cyprus public and in Europe and so on. They need to understand the active management of funds, the safety features of funds, which are built into the legislation of funds and the approval of the funds. They need to understand what is a stock, what is a bond, what is an ETF, which is an exchange-traded fund. They need to understand a simple savings account. They need to understand how a consumer loan works, and this is where interest compounding comes in, and mortgage loans. But interest compounding is, every year they apply interest to your balance, and then, of course, you owe more because of this added interest, and then you pay interest on interest. To put it simply, this is interest compounding.
Yeah.
So you end up, over the years, I mean, if you're a saver, this is good for you, but if you're a borrower, this is killing you, especially when interest rates are high, especially on a credit card balance, especially on a consumer, on a car loan. I called the other day Bank of Cyprus. They're giving car loans for about, I'm not advertising any bank, from 6 to 7 to 8%, depending on the age of the car and how much is your own contribution. So it's quite high. So people have to first understand the basis of finance, of compounding interest and so on, and then the different products, like I mentioned, funds, insurance, products, stocks, bonds, and so on.
I remember that actually when so I went to Cornell to do a professional course some years ago in finance for hotels. And I remember one of our lecturers who was, I don't know, a leading expert in America at the time. And he picked up a CD then and said, right, guys, how much is the CD? You know, $10 or whatever. And he just did a little equation. He said, you buy that on your credit card and you don't pay it back. And you think, oh. And then he was like, after, I don't know, what period of time it was then, he was like, that CD cost you $100.
What an amazing example.
Yeah, and he was like, that's all it is. And he was like, pay off your credit card. Like, don't have a credit card if you can avoid it, or just pay it off the quickest. Yeah.
So this was the outcome, and another part of the study showed that almost 50% of the population, again, didn't understand the need for diversification. If you take any finance course, this is Finance 101. Risk and return and diversification. Actually, I had a professor in the States, professor of finance, who jokingly said, if you are taking a finance exam, if you don't know the answer, write something about risk or diversification, you will definitely get some marks. So
this is like the basic. If you know nothing else, you need this. I love that.
But people don't understand it. They don't understand the need to diversify.
But this was, actually, that's one of my questions. Yeah, no, finish, because then I'll go on to the next.
So this is, I mean, again, because I come from the funds industry, this is the beauty of funds, because you invest in a fund, already it's a diversified portfolio, it's professionally managed, it's professionally monitored.
Yeah, you're not just leaving
risk management.
That one amount lump sum in a bank, for example.
Exactly.
Because I was going to actually ask you, somewhere on this list, there is, you know, to go into the 2013 financial crisis, banking crisis here in Cyprus. And I think that's an example of what you said, like most people didn't understand. Most people did not understand, as I say most, many that I know, they didn't understand when they took a loan out or when they were a guarantor for a loan. You know, uncles, aunties, random people had signed. And I mean, we know people that were coming to the hotel and they were like, we signed for someone they barely knew. They were like, it was all nothing. And the banks were advising, yeah, just sign. And yeah, I'd love to pick your brains on that. And
many people didn't even understand how they would be able to ever pay back those loans that they took.
In the first place.
In the first place.
Which is insane. So there wasn't even like a monthly income available to repay a loan.
I mean, even if there was a monthly income, you have to take some consideration for unexpected expenses, for, you know, maybe it's a health issue, maybe it's your car breaks down. And to be able to set aside, I mean, they were all maxed out. They didn't have any leftover disposable income to pull in a savings account for a rainy day. And they never differentiated between the needs and the wants. I may want to have a second holiday home in Protaras. This is a want, it's not a need. The need is to have my primary home in Limassol for my family. This is a need. But to want a second car or to want a second holiday house in Paphos, I mean, you have to prioritize. You have to prioritize all your expenses, your needs. You have to, depending on everybody's situation, what is your income, what are your expenses, everything starts from income.
Yeah, and available funds. Why do you think in Cyprus, because I did hear many people, foreign people, comment that despite everything that happened, we took it quite well. I mean, there weren't the riots that were in other countries. People lost a lot. There were huge tragedies and families, and there were, a couple of, I don't know, let's say disasters. I mean, there were a couple of suicides, but on the whole, when everybody's money disappeared overnight, people kind of took it
I think this is an amazing
calmly.
Case study for behavioral finance. You know, there is a big topic now in economics and finance, which is called behavioral finance. This is how you behave when investing, diversifying. But also in this case, My personal view is that people didn't lose hope, number one. Number two, the community, because we are very family-oriented in Cyprus, you kind of think that you will get support from your parents, from your siblings, and so on.
So there wasn't such a big panic as maybe in another culture where
in another
they would have been
culture
left
where you don't
alone.
even know the name of your neighbor, or your family lives in a different state. Like, for example, in the States, you may be living in New York and your family is in California, and you get to see them maybe once a year. So I think here, because of the size, the proximity, the closeness of families, I think they had to depend on each other, and I think they felt, why get into trouble? Because if you go out and riot, you may end up being sentenced to, for a penalty or to jail and so on.
Yeah, and when life was already bad, you
and
didn't
you
need
have
to
your
act.
family, you think about your children. I mean, you lose something, but you have to stand up. And this is true for every misfortune in life. You have to stand up again on your 2 feet. Stop complaining. I mean, we had to complain, but stop complaining, pull up your sleeves, get back to work. And I think this is the mentality of the Cypriot people. And I think this comes from the fact that they had to go through the 1974 invasion and many people losing everything. So once you've lost everything, if you manage to rebuild your life, maybe it's not so tragic if you lose like 100,000. I'm not saying it's
Yes,
good,
it was
but
easy, but they'd lost more before,
but
and they could do it again.
Yeah,
Interesting.
I think our history trained us or prepared us for this misfortune, of course.
So, in your opinion, what is the best type of investment? I mean, if somebody's listening to this, okay, don't hang on the words, people. Go and see Leon Investments and Demetris. But if someone's now listening and saying, yeah, I have 50,000 euros and I want to invest, what's the safest?
First of all, I mean, I wouldn't call it the safest, because everybody has their own risk and return profile.
Yeah.
And different ages, you can take on different level of risk. For example, if you start early in your 30s, you can take higher risk, because even if you have a negative year or two, you have a long time to recover. But if you're in your 60s and you're closer to retirement, of course, you have less capacity for risk. Also, the capacity of risk depends on the amount you invest on your own wealth as well. So if you are worth, for example, 100,000 and investing the 50 in investments, that's a big risk. But if you are worth 1 million and investing the 50,000, I mean,
it's a smaller,
you have the ability to take a bit more risk. But I mean, the idea here, again, I go back to basics of portfolio management and finance, is to diversify, number one, to do your homework. And this is why funds, because the funds industry is so big in Europe, in the States. In Europe, the funds industry is like 20 trillion euros invested in different funds, which is almost the size of the European GDP. The same is true for the US, because when you invest in a fund, you have a professional portfolio management, you have risk management, you have a depository, you have a fund administrator. Everybody's checking on the fund, on the diversification, on the riskiness of the fund. They assess their liquidity, they assess their diversification. So it's a professionally managed fund.
So, yeah, you pay a high price for that, but it's worth it.
You pay a small management fee. You pay a small management. For example, let's say I want to invest in, because I know China is a high growth economy, I want to invest in China. The best way is to find a fund which invests in China, because I know they follow the market, they understand the companies. If I go on my own to invest in China and open a brokerage account and start studying about Chinese companies, I will not be successful. I will lose my money. And even many years ago, I used to remember many Cypriots going to invest in land in Romania and Bulgaria because there was cheap land, and they lost everything because, I mean, it's different when you invest in a fund which is professional. If you invested in a real estate fund, investing in Romania and Bulgaria, probably you would have made a lot of money because the fund would have invested in shopping malls, in residential, in commercial, in hotels, in all kinds of different real estate. Instead of you alone going to these markets, they show you a nice piece of land by the river, and say it's beautiful. You buy it, and then
it's not worth anything.
It's not worth anything. So what I'm trying to say is that because the level of financial literacy is so low, or financial illiteracy is so high, the best approach is to identify some funds. Maybe you buy some stock funds, maybe you buy some fixed income, some bond funds, maybe you buy some other balanced funds, diversified funds. So this way, first of all, you get a monthly or daily pricing, NAV. You get to monitor, but you get to sleep because the fund is professionally managed, is regulated. It's a highly regulated vehicle by SISEC or by any other regulatory. If it's in the UK, it's the FCA and so on. So you have peace of mind, and this is why the funds industry I mentioned before is so big. It's like almost a substitute for deposits. Because
I think
you don't
even
want to keep all your money in
and
the
after
banks.
the 2013, everybody panicked because if you've got more than 100,000 in any one bank, it's not guaranteed or secured. So it makes funds even more attractive and different types of investments.
And these days with investment, all the funds, including our funds, we offer online access to investors. You have your own password. You can look at the price, the NAV of the fund. Every month you can see how much you've made and so on.
Yeah, it's very transparent.
You can redeem. These days with the technology, they used to say in Cyprus in the old days, no, I want only to buy land because it's there. I see it, I touch it.
Yeah, tangible.
It's tangible. But okay,
Yeah, there's other. I know. I think there's
to
still.
diversify.
I think there's still a lot of people with that opinion, isn't there? There's still, yeah. So, why is Cyprus so attractive to funds?
Okay, I think Cyprus, the authorities, they made a very conscious effort to develop Cyprus as a fund center, and this came after 2013. In 2013, the banks dominated the economy. The deposits, the money sitting in the banks was like 5 times our GDP, which is amazing. I think this was maybe in one or other 2 countries this has ever happened before, to have so much money sitting in the banks. And after the banks failed, we needed to sustain the financial sector. And I think the next step, and rightly so, was to focus on the funds industry, which it's a big industry. It has to employ fund administrators, depositories, fund managers, risk managers, portfolio managers, back office, analysts, all kinds of jobs related, compliance people, very important. Sorry, I forgot about compliance, but it's grown, and it is growing into a big industry. I mean, for the size of Cyprus, it's now beginning to make a nice contribution. But Luxembourg is the #1 funds center in Europe. The amount of assets invested in Luxembourg funds is like 5 trillion.
Wow.
5 trillion. And Luxembourg is a country the size of Cyprus.
And here?
Okay, here the amount invested in Cyprus funds, based on the latest reports from SISEC, is around 11-12 billion. It's just over 10 billion. But it's growing. If you consider that the GDP of Cyprus is like 20-24 billion, it's a good step, and it's a step in the right direction. So there is support from the authorities. There is support from the investment industry, but there is support from companies like us who we could easily go and register our funds in Luxembourg, but we registered our funds in Cyprus to show our support to the jurisdiction, our faith to the jurisdiction, and to be part of this effort to grow the fund sector in Cyprus.
That's so fascinating. Thank you for sharing all of this.
Sure.
So what would you answer to people who say that Cyprus is corrupt? or that we have many officials that are corrupt. And I think this came out even more after the Al Jazeera report, and a lot of people, I think understandably, and who don't know the market so well, got worried. What would your answer be?
Okay, I think this is true in many nations, in the majority of nations, I would say. Maybe we would exclude some of the Scandinavian nations and so on. But even in many European, and I don't even want to go to emerging markets and Asian
Lots of envelopes.
and African and Latin American nations, okay? And of course, it's a small place. It's part of human nature. It's greed. Again, I mean, what can I say? I mean, we have to find the ways to fight it, of course. There are the rules, the regulations, the legislations.
We're part of Europe.
We're part of Europe. If you're a politically exposed person, a PEP, you know, you hold authority, you have to be accountable, you have to report your holdings, you have to report your assets. I mean, with a bit of more scrutiny, due diligence from the side of the authorities, you can minimize it. I don't know if you can ever, even in the States, I mean, they have it.
Exactly. Even in countries like the UK and definitely in America, it comes out everywhere.
But this is why you have all the rules and regulations to at least try to contain it and minimize it.
Yeah, I think that's a really good point.
But, you know, I have been, and just to add, I have been teaching the course of ethics for CFA Level 1 for the past 12 years. And not only ethics, I teach a lot of the SciSec courses, which have to do with market manipulation, market abuse, investment protection, investor protection, I should say, ethics in the financial sector. Just like every sector has to have ethics, you know, when you're a doctor, you have ethics. When you are a banker or you handle people's money, you have to follow certain ethics in the financial sector. There is ethics everywhere. So I think as a society, if part of our growth is also being able to understand this part of ethics, we should be able to minimize, because it was greed, it was people who came to power and they thought, oh, this is my time, this is my turn to make money. They didn't realize this. You're a public servant. You are there to serve. It's a big challenge. It's a big responsibility. You're not there to make money. If you want to make money, stay in business. You know,
stay in the private sector.
Stay in the private sector.
We had this conversation actually, or part of it, with Savas Perdios, who was also on this podcast. It was a really amazing interview. If anyone hasn't watched it or listened to it already. And he actually said, oh, thank you for bringing this up, because no one really addressed that to him, that he was making far less money in the public sector being a deputy minister than in the private sector. So you do it out of love for your country if you're doing it well. You don't do it for the money.
Exactly. Exactly.
Yeah. Thank you. So I've got a tricky one for you now. What makes you nervous when it comes to funds and finances?
What makes me nervous is that, okay, Cyprus has grown it is growing as a financial center. We have a lot of brokerage companies which deal with Forex. We have a lot of fund managers, funds, and so on, banks. And just like in 2013, when the news broke out and Cyprus got a very, very bad reputation, once you lose the reputation, it takes years to regain it. So what makes me nervous is this, something happening which unfortunately will cause Cyprus again to lose its reputation. So this is why I go back to ethics. SciSec has gotten stricter, better staffed over the years. Thanks also to the EU directives, MiFID II and all kinds of other directives which try to promote investor protection. AML directives, which are also very important for us. We had the situation with the passports, which was also not very good news for our credibility. So yes, what makes me nervous is the loss of credibility. Credibility is good for all the sectors of Cyprus, not just the financial sector, but for all the sectors, even for shipping sector.
Yes, we have another episode coming out. I think, well, it would have already been out by the time this is released again on shipping.
Because I used to work for a German shipping group in Limassol.
Okay.
They
Which
had
one?
some shipping funds. It was Bernard Schulte.
Yeah.
We had the shipping fund, they had the shipping fund. And I could tell from the UBOs from Germany that their worry was also this credibility. Because we were raising money in our shipping fund from international investors, and we were always worried that if something goes wrong with Cyprus's credibility, it doesn't mean our fund is bad. It doesn't mean we didn't do our job properly, but it will hit us as well.
And it's such a shame because in any industry, or in any country, it only takes one person to spoil the reputation for everyone else. Yeah. So where do you see the future of financial institutions in Cyprus?
Okay, I like this question because I have very strong opinion about banks. Banks, they have to, because of technology, they are being disrupted in a major way. You know, there is so many ways now you can make payments. You don't need a bank anymore. There is so other ways to raise money through crowdfunding. If you have a business, if you have a startup, even if you have an established business, there is crowdfunding. Through platforms, through technology, you don't even need to walk into a branch. Okay, you see this in Cyprus. Many of the banks are closing branches and they are investing in technology. I think they have to do it even more rigorously. I see great disruption in the financial sector in general because of technology, fintech, new assets like crypto assets. We need to understand, we need to regulate, because if something is not regulated, people will lose money. If people lose money, they will go away from it for many, many years. We had 20 years ago the situation with the Cyprus Stock Exchange. It was a huge bubble. It burst. People lost their savings. The Cyprus Stock Exchange has not recovered since then. The average daily volume of the Cyprus Stock Exchange is less than 200,000 euros.
Wow.
So if you have enough, if you have 200,000 euros plus to buy a two-bedroom flat, you can manipulate the entire Cyprus Stock Exchange.
Yeah.
So just to show you the size and the price we paid for that bubble bursting and all these thousands of people losing their money. So it goes again back to credibility.
Yeah, credibility and ethics. I have so many still questions, but I think we'll just wrap it up now with two. One, Leon MFO. Where did the name Leon come from?
This is from our founders, of course, but Leon is the lion. It's strength, it's power. You're the king, and you know.
Yeah, special name.
Yeah.
Yay! Well, hopefully my son will listen to that part.
Unique.
Yes, I love it. I love the name Leon. When I was pregnant with my boy, we were like, oh, we like Leon, and we were looking at Leonidas, Leondios, but any name we looked at, Leonardo, it was so that we would shorten it to Leon. So eventually we said, let's just call him Leon. And that was it.
Good. And MFO means multi-family office. So this is where we manage portfolios for high net worth individuals who are like their family office or a multi-family office. We deal with all their investment needs. We provide investment advice, their portfolio management, and other related services, maybe if they need any succession planning or any other advice, again, relating to their assets and relating to their portfolios.
And going back to the previous answer you gave, what do you think about crypto?
Actually, we had a piece about crypto lately, which I posted on LinkedIn. I think crypto is gaining popularity. The more it gets regulated, the better, of course. And there was a case in the States. There is a company trying to create an ETF, an exchange-traded fund, which will be investing in crypto. This will allow the masses, the average investor, to invest in crypto through this fund. for me, if it's well regulated, if it's through a fund which is also professionally managed and the risk is well monitored and so on, it may be good to have a small percentage of your portfolio. I mean, less than 5% of your portfolio, maybe 2 or 3% in crypto, because even if you lose everything, it will not hurt you. It will not destroy you. But I think it has future. At the beginning, I was not a very big proponent of crypto, and still I'm a bit hesitant. But I think
Skeptical.
you shouldn't ignore it totally. Yeah.
Interesting. What's your favorite quote? Everybody gets asked this question.
Wow,
so
okay. Being an investment guy and being in investments for so many years, I follow Warren Buffett. Warren Buffett is a legendary investor. He has made billions. He has a very impressive track record. Those who invested with him in the 60s and 70s, they have become millionaires. He's in his 90s. I think he's 95 now. His brain is very sharp. And he's a very long-term investor. And he has many quotes, of course, if you search on the internet. But one quote I love is, he said, risk comes from not knowing what you are doing. Risk comes from not knowing what you are doing. And he says you have to study before investing. You have to do some research, and research will reduce your risk because you will start to understand what am I investing in. So this goes back to the financial
education.
literacy. Yeah. What is this fund? What is this insurance product? What is this stock? What is this bond? Do some homework. So he says, do your homework before investing. You don't have to be a financial genius or a financial guy with an MBA or CFA. If you just read about a company, you will understand a lot about the fund. There is a prospectus, there is the kit, the key information document of the fund, fact sheets of the fund, which is just 2 pages. So just if you do some homework before you invest, and even in 2013, if people did that, why a bank offers you 7% just to deposit your money there? It means they're desperate for money.
Yeah.
Why would they offer you, and how will they be able to make the 7% to pay it back to you?
Yeah.
You know, if I
look at what happened in Lebanon.
Exactly.
It went up to, I think, 12 or something crazy.
I mean, let's say we open a bank today and we say we offer 20% interest. We will gather millions, but how we will generate 20% to pay back the depositor? So people should understand that, yes, if the bank is paying so high interest, it means
they're at risk themselves.
They are offering on deposits. It means they need money. Maybe we're at risk. Study. What are the exposures of the bank? You know, these Cypriot banks, they had 20-30% of their income coming from Greece. Greece was a major disaster. So
but on the other hand, when interest rates are so low, what does that reflect on the bank?
I mean, when interest rates are low, usually banks offer low interest rates as well. So it all has to do with inflation. And we haven't seen inflation for the past 20 years. And this is what is also worrying us today, because for the last 20 years, we had price stability. We had low interest rates where you could borrow, you could invest, you could pay back your loans. But now with high interest rates, this is more difficult now to be able to borrow and pay back your debt. Yes, it may give the depositor more returns, but these returns are eroded by inflation. So you have to see in real terms. Maybe now they say if you deposit your money, let's say you get 3%. But in real terms, it's almost zero because 3% is the inflation rate. So you don't need to look at the nominal rates. You need to look at the real rates as well.
This is also interesting. I really thank you, Demetris, for your time, because I told you before we started, I'm going to ask some maybe shockingly basic questions, but so that everybody listening at any level will learn something. And I have to be honest, finance is definitely not one of my favorite. I prefer accounting to finance. So for me, I've also been so intrigued by everything you've had to say. I didn't think I would find everything is fascinating. And I'm so grateful that you've also put it in terms that we can all follow. Now we have the bonus question, drum roll. I don't know what this is. So this is questions from our staff. Okay. They also don't know who will get what. So just pick one and I'll take that. And let's see who wrote what to you. How would you describe yourself in one word?
Wow, this is a tough one.
The toughest question so far.
Can I pull another one?
Oh my goodness, no, that's it. I'm writing your name on this. In one word, it's one word as well. It's tough. Or maybe say a few and then we'll narrow it down.
No, I always like to study and grow for myself, for my personal development. This is why I have been teaching for the last 12, 13 years. Not so much for the money, but to be able to study, to master the topic myself, and also be able to transfer it to younger people in a way that they understand it. So I like to, I don't have Facebook, I don't watch a lot of TV. I prefer to read a book. I prefer to read about a topic which interests me. So I like to study a lot just for my own personal development. And I think it keeps my brain also, I've read also studies about growing older. It keeps your brain more functional when you read and study and learn new things. So I would say I'm someone who likes to learn new things. I love this.
It's a growth. Yeah. I don't know if there's a word that sums up a person obsessed with education. A scholar. Thank you so much. That's amazing. Demetri, we wish you all the best.
Thank you, Farah.
Thank you for coming on Hotel Talk. This has been one of the most interesting episodes and surprisingly interesting, I would hazard to say. So thank you very, very much.
Thank you for inviting me. Thank you for your time.
It's been a pleasure.